Alright, what's going on, guys? I will go over the trade that I took on PM session today. So, first things first, we had 4-hour SMT at these highs. ES took its high, and the Dow Jones was you can see, very much stronger than both of these. We ended up reaching this premium array, but we had a strong SMT between ES and NQ. So once I saw the failure to take this high, and then a displacement lower, and if you look at the 15-minute, you can see, or even at the hourly is even more clear. You can see after the failure to take the high, you get an hourly change in the state of delivery. You always want to wait for the closure of the entire up close candles, unless you have a very strong bias or drawn liquidity. But it's a Monday with a big week of news ahead, so no reason to try and pick the top, right? Just be patient, wait for your entry model. But so seeing that, you can see this CSD also occurs at 10 a.m., which is very important. Price wicks below the weekly open, rebalances some of this inefficiency down here. You can see on the 15-minute run some sell side liquidity, and then we push higher. But what do we have waiting for us? We have the order block that was created, and then you can see here that 10 a.m. CSD on a smaller time frame. Here's the SMT high, and all price did was have a deep retracement into this order block. And I'm marking out the opening price because that is the most sensitive point of the order block. And so once I switched the 5-minute to see if price wanted to continue higher, just because we did just have this very aggressive move up, so no reason to try and catch the top. But you can see we're failing to displace over this high on the 5-minute. We're still inside of this FVG inside of here. And you can see, of course, price is inside of that 15-minute order block. So let's mark that out. We're still inside of that 15-minute order block. So what I wanted to see if price was going to continue higher, I wanted to see if price was going to close over these two last down close candles. And you can see we also have a key time approaching. We're waiting for 1:30. And also 1 o'clock is where you can expect some form of manipulation. So failure to close above this and then a closure below this last up close candle is what I was looking for to confirm my bias. So right here we get a closure below here, indicating that we are in a sell program now. This is where you get your change in the state of delivery. And two reasons for this, other than failing to close above these two, is failure to displace above this high, and we have a sweep of this pool of liquidity, which is very important. I'll let you guys backtest this, but you could see that we swept the lunch high, and that is a key area of liquidity. And more importantly, while sweeping the lunch high, we're tapping the 15-minute order block, as you can see here. Lunch highs and lows are very important. Normally, if you get a um, a move like this higher, but you're still bearish on the higher time frame, that's when you will get your PM session reversal, and vice. You can, of course, inverse that. It works in both ways, of course. So if you mark out the low of lunch, which is right here, and the high of lunch, you can see which one gets taken, and we get an obvious manipulation move higher, stabbing into our key level and running this pool of liquidity, which is the lunch high. And then now that's where we're looking for a change in the state of delivery on any time frame, but I was just looking on the 5 just because it was very clean. And we're also in a consolidation, so consolidation can only lead to expansion, right? It doesn't go consolidation and then just reverse, right? So what we need is at least at minimum this PM or lunch low, but more specifically, if you use the swing high or the swing low to swing high from this new range, I was anticipating price to come back to the equilibrium of this range. And we also have this 5-minute breaker down here acting as a draw on liquidity. I didn't actually see this in real time. I was just more focused on the equilibrium of the range, and you guys will see that here in a second. So once I saw all of this occur, I now go into the 1 minute time frame to kind of see where I want to see, or how I want to enter. And my model is CSD and just a fair value gap. As you guys can tell from the video, I am aware of other PD arrays, but the main focus of my model is just entering off of fair value gaps. I am aware of order blocks and breakers if they are there and if they are actually valid or not, and I do use that as more confluence in the back of my head, but I'm not hyper fixated on looking at those. So you can see here, once we get our 5 minute CSD, which occurred at 120, you can see here, here's 118, fair value gap with the volume imbalance. Price is rejecting that here, and then breaks this low, creating a fair value gap, which is important. And we get institutional order flow entry drill here, and this is also where we get fair value gap SMT. So I still wasn't in yet. If I honestly should have taken this entry right here, but I did not, and I'm still getting, comfortable with kind of just trusting my narrative and my draw. But this or this would have been a very nice setup. But regardless, if we continue to play price, you can see what happens. So since I missed this move down, I didn't want to chase price. So what did I wait for? I waited for my next key time, which is at 1:30. And why is 1:30 important? That's for you to find out. But if you are expecting bullish or bearish prices, you want to see a Judas swing above the opening price of 1:30. So here's 1:30, and it's a Monday with no news, right? And we have a jam-packed week full of news, and it's NFP and NFE, so it's high impact, right? We're expecting big distribution days, Wednesday through Friday. So on Mondays, price normally likes to retrace to premiums or discounts. In this case, we're anticipating price to come to a premium. So 1:30, I want to see a Judas swing above this opening price. Same way you would use midnight or 8:30. If I play price, you can see what happens, right? We have a fair value gap inside of the fair value gap's actually not even in a discount, so, or a premium. So you don't want to be entering here. If you look on the 3 minute, you can see that this wick up here is what actually price is inside of. And you can see it taps the CE there. On the 5 minute, you can see where we're at as well. If you go to the 3 minute, it's pretty clear that this wick is wicks are gaps, so you can also use this up close candle here as some resistance, I should say. But you want to be shorting inside of the premium. And so once I saw that price once again was continuing to reject and my bias was still valid, all of this is, now that I'm seeing this, is just vertical accumulation. And so once we got it close below this down close candle, this is where I was looking for my entry. And this is actually where I wanted to short, but I didn't trust myself entirely for some reason. But once I saw this here, price continued to use up close candles as resistance, and we created another fair value gap. This is where I entered. So all I did was use my fair value gap once again. And what do we have? We have our pool of liquidity here with equilibrium and that breaker with the weekly open, right? So here's the breaker that price was on the 5 minute, that price would be seeking, as you can see. So I got my entry right here. I got filled right there. I got filled in a premium of just this little range. You can see I didn't enter here. I entered up here at 68. So my risk to reward looked like this. I entered at 68, just below the CE, and my stop loss was at this high. I wanted to see this high be protected because on ES you can see right here that we left equal highs. And if we're going to displace lower through this low that created a fair value gap, that shows me that this area should support price because this is balanced up here. This area up here is balanced. So We wait for price to come back into a premium in this range. You can see all it did was just kind of retrace into the CE of this order block, and then pretty quickly we found out that we were onside with liquidity. And so first take profit was here. I entered with 10 micros. I took 5 off at this internal low, and I took 3 off right here. And once price kind of started to chop around a little bit, I wasn't worried about my runners whatsoever. I wanted to let my runners run, but ES left equal lows, so that just made me have an even stronger conviction in holding this trade. And you can see that ES was in a deeper retracement here than NQ, since NQ is weaker. And eventually price ended up taking our last 2 contracts off. My second to last trim was here, just at this internal low. I wanted to take off as soon as ES took out these equal lows. And the last price target that I used was just a standard deviation -2. Simply from this swing high to this swing low, I used these 2 standard deviation right here, and you can see where we react. We continued to sell off, and we ended up bouncing from that breaker right there. And you can see what happens the rest of the day. But you look at the 5-minute, right? Everything we went over the framework, this is just too big of a liquidity void for us to not come back down to rebalance it, at least the equilibrium, right? And so we know, since we've been in a sell program on the higher time frame for a little bit, that's why you can anticipate these inefficiencies to get filled. And if breakers are a opposing strong drawn liquidity as well. But that's all for this video. I hope you guys enjoyed this video, and I'll see you in the next one.